Welcome to Expert SEM Supply Chain Knowledge Sharing session. In this session, we are going to see one of the financial document called balance sheet. Though most of you may be aware, let us see a brief explanation. The term balance sheet refers to a financial statement that reports the company's assets, liabilities, and shareholder equity at any specific point in time. Balance sheet provide the basis for computing rates of return for investor and evaluating a company's capital structure. In short, the balance sheet is a financial statement that provides snapshot of what a company owns and owes, as well as the amount invested by the shareholders. Balance sheet can be used with the other important financial statements to conduct fundamental analysis or calculate financial ratios. Investors can get a sense of company's financial well-being by using a number of ratios that can be derived from a balance sheet, including debt to equity ratio, acid test ratio, among many other ratios. The income statement and statement of cash flows, which are other financial documents, provide valuable context for assessing the company's finance, as do any notes or addenda in an earning report that might refer back to the balance sheet. The balance sheet adheres to the following accounting equation, with the assets on one side and liability plus shareholders equity on the other, balance out. Asset is equal to liability plus shareholders equity. This formula is intuitive. This is because a company has to pay all the things it owns by either borrowing money, taking on liability, or taking it from investors, issuing shareholder equity. However, there are a lot of limitations for balance sheet. Although the balance sheet is an invaluable piece of information for investor and analysts, there are some drawbacks. Since it is just a snapshot in time, it can only use the difference between this point and another point in time in the past. Because it is static, many financial ratios draw on data included in both balance sheet and the more dynamic income statement and the statement of cash flows to paint a fuller picture of what is going on in the company business. Thanks for watching. Bye.